Hello, everyone. This is Sergio Marrero, and we are here at RBL1 Live with Melissa Bradley, who is the co-founder of at Eureka and also managing partner of 1863 Ventures. Thanks for joining us, Melissa.
My pleasure. Thank you for having me.
So Melissa has an extensive background, over 20 years in entrepreneurship, serial entrepreneur, has also served under presidential appointee under the Clinton and Obama administration, and has led several initiatives. I won't do it justice. So I talk about has worked, in with several organizations, including the former CEO of Tides, founder of the Entrepreneurship Development Institute, among many other accolades and activities. So we're honored to have you tonight, and excited to dive in to not only cover entrepreneurship, but also policy and impact and the whole realm. And then also a professor at Georgetown University, where she is an alma mater. So turning it over to you, if you can share with the audience, what is Eureka?
Sure. So Eureka is a small business platform that is designed to reduce the friction for small businesses to grow and scale. And I know that's a mouthful, but in reality, what we all recognize as co-founders is that, getting a business to scale is really hard. And too often people glaze over what is really important around operations and execution. And too often there are television shows that just make it seem oh so easy and just give me a check, all will go well. And we all know that that's not what happens. So the idea for Eureka is to explicitly help not just any entrepreneur, although all are welcome, but to really focus on what we call next wave entrepreneurs, which is really focusing on women and entrepreneurs of color. And we do that because, not just because I am a woman and an entrepreneur of color, but we recognize that Black women are some of the fastest growing entrepreneurs in this country. Latinx businesses once started are the fastest growing businesses. We know the demographic changes are happening. If you're going to start a business, go to where the target market is. And so we are pretty explicit that while the platform is open to anybody, we have spent a significant amount of time making sure that we have programs that are culturally competent, relevant, and sector supportive of business that are typically started by women and people of color.
That's amazing. So how do you all work? It sounds like a community, but what are some of the products and services, community for entrepreneurs at all different stages? But what are some of the things that are provided within the community?
Yeah, so we started in 2019, and then here comes 2020. But the idea was that we started out really doing three things. Coaching was the first one, and I know there's lots of articles out there that Black entrepreneurs in particular are under-supported and overcoached. What I have found, and particularly as a professor, as you mentioned, I did a study 2 years ago that showed that Black entrepreneurs spend $250,000 more than their white peers to start the same exact business. And some of that is attributed to the fact that there is a 4x churn on consultants or people who can help us because we don't have access to free lawyers, free management consulting firms. And so I think that there is a distinction between being overcoached and then not having the right coach. So I do not want to deny that sometimes people are overcoached. What we realize is that sometimes the coaching is just so generic that it doesn't really help the business grow. So we started with the premise that because all of us, I was actually working with entrepreneurs every day, but my co-founders were kind of volunteering and helping. And we realized most of the information they were getting was not really accurate. And in part because it wasn't given to them by real entrepreneurs. So that was really the impetus of the platform of how do we create and reduce friction for entrepreneurs to move forward. And then because one of my co-founders actually used to work at Facebook, if you log in, you'll see that the community looks pretty familiar. There's an ongoing feed that people can connect. And we realized that if we let people together who had similar values and wanted to really grow successful businesses, they would find ways to interact with each other. And our job was to figure out what were the tools they needed to be able to help them. So we started with coaching. And now we actually have programs that one would say is content, but is really designed to help entrepreneurs go through a 12-step program that three of us have actually designed based on our experience that says, if you want to get your business from A to E or A to Z, these are the fundamental steps that all the larger companies have gone through, and let us help you get there. And the final thing I'll say, though, is that once George Floyd happened, not only did we become a place for kind of coaching and content, we became a place for capital. A lot of the large companies reached out to us, and we've actually deployed over $100 million now to entrepreneurs, either women and or entrepreneurs of color, where a lot of these companies say we want to help small businesses, but we don't know how to get to them. And obviously the cost to get to them is a little hard for me, Google, to write a $5,000 check to someone. So we've been really privileged to be able to partner with some of these large companies like Salesforce and Google and WeWork and others who put money on the street to say, look, we've got a community of entrepreneurs. Don't go spend a whole bunch of money and take half the grant that you want to give them trying to find them. They're right here on our platform. So we're really privileged to now be able to say that we have partners who help to begin to fill that capital gap as well for the entrepreneurs on the platform.
That's amazing. Love the and love the name Eureka. So that's great. So entrepreneurs on the platform you've partnered with these organizations to are they making investments, or are they more grants for these organizations? Oh, I think there we go. Go ahead.
Sorry about that. I was coughing. I didn't know
No problem.
that out there. So sorry. And then I realized I can't get back on. So the platform, I think you asked me, who is it for? Is that correct? Mm-hmm. It's for anybody. So, we have developed 4 different archetypes of entrepreneurs. And we have our names, but, it's like grower, prover, discoverer, grower, prover, scaler. And so discoverer is someone who's really just starting. Grower or prover is somebody who's got a little bit of traction. Grower is like, now I'm making real revenue. And then scaler is I'm actually on my path to be $1 million plus business. And so we've actually developed content for each of those 4 segments. So anyone is welcome. I think when we first started, we saw most people in the kind of grower and prover stage. So had a little bit, the business was up and running. Very few had revenue, some did. That was really the mix. I think since COVID in particular, since a lot of folks are struggling, and we're very well aware of that, we've seen an increase in those who are, I would say, are the discoverers, and those who are just getting started, who I think are trying to figure out, look, I'm living in a vulnerable position with my current place of employment. Is entrepreneurship a way to help me patchwork that together? And then I think we've seen a lot of larger companies who all of a sudden were multi-million-dollar companies who lost a lot of revenue and realized I need to refine and retune what I'm doing with my business. Let me go back to basics so that I can get back on that trajectory. So we have a wide array that I would say the bell curve are kind of some of those, I would say, early stage or seed businesses from an investment perspective, who I think are highly viable and highly scalable with the right amount of support and the right amount of capital.
And especially in the underrepresented community, I was talking with a founder the other day that talked about founders that they may not be building a high growth startup, right? It may be right. Like a food line, or a chain. It may be a chain, but a chain of barbershops or restaurants. Do you also serve the small and medium businesses on Eureka?
I would say that's primarily who we serve, right? I think with all due respect, there is a ton of resources for high growth tech companies. We find that most of our folks are beauty, healthcare, CPG companies, which I think reflects, no disrespect, but I think just reflects national data of what are companies that entrepreneurs of color tend to start and women tend to start because they stay with what they know. They don't leapfrog to stuff they don't know. And they also are very well aware of what their target market wants. We do have some tech businesses on there, but I would say the majority are really CPG retail companies that I would say are probably going to be, if we're lucky, $100 million businesses, but probably not a $1 billion business. And there's nothing wrong with that. We do have a cadre of tech businesses that are already in the millions who are trying to be those unicorns, and they are more than welcome to be on the platform as well. But I would say our sweet spot are really those early stage businesses where I would say there's that valley of death. If you look at any of the various charts, it's like, oh, I got a great idea. Oh, wait, I can't find anybody to support me. Oh, my money is running out. Oh, okay, how do I get back up? That's really us, right? We're really trying to build a bridge for somebody who has a really good idea, who has done some market testing, even if it's just friends or family, but there's some market validation. And now I want to figure out, how do I turn that into a scalable business?
Amazing. Can you share with the audience more information about 1863 Ventures?
Sure. So a lot of the work that we're doing in Eureka came from my experience, excuse me, as the founder of 1863 Ventures. And 1863 Ventures was started about 5.5 years ago. And the idea was literally a project. As a professor at Georgetown, my students wanted to take on a summer project that was focused on impact, and I was doing that for years. And they decided that they wanted to promote entrepreneurship east of the river, which is a relatively low-income community in the District of Columbia for the most part. And we started out as just a project, and it was going to be a summer conference to say, hey, let's go help some entrepreneurs and really kind of democratize access. And what we realized when we got there was there were some amazing entrepreneurs there, but nobody was there to help help them. And so and a lot of the programs, I should say, that the city were offering were really for micro entrepreneurs. They were like $1,000 here, $1,000 there. And these were like several $100,000 businesses. So we actually made a bet with the city that said, if I could find 500 businesses in 3 years, would you change policy? Because I can do what I can do, but if we don't change the system, nothing's going to happen. And they said, okay, I dare you to find 500 businesses in 3 years. Well, Sergio, I'm happy to say we found 527 in 18 months. And they said, what did you do? I said, well, actually just went out into the community and asked, who should I be talking to? And I actually walked into people's stores. And so I'm happy to say the city has made a shift, but what that did was it then forced a lot of other cities to call us. And so we went from being an idea. We then called ourselves Project 500, thinking, okay, we're going to do this for a couple of years and we're out. And then realized all these other cities, oh, wait, we have the same problem. We've got tons of stuff for startups, but nothing for businesses that are up and running. And actually, Endeavor, which is a national entrepreneurship group, did a research that said in the United States, 88% of all entrepreneur organizations are for startups. Good for them. But not even a full 12% were focused on scale. And so when you think about 50% of all businesses fail after 5 years, now we know why, because there's no one there to help them. So 1863 has been laser focused on helping people come from a startup founder to a CEO. We don't talk about pitching. We talk about operations. We talk about people and culture. We talk about finances. We talk about customer acquisition and customer retention, with the idea that when you finish, if you're already at a couple 100,000, you are now on the pathway to be several $1 million businesses. And knock on wood, we've seen that happen. Our companies are growing. Even despite COVID, over a third of our businesses have all raised money. Oh, more than half of our businesses have hired new people. And just about 57% have actually increased revenue during COVID. So it speaks to the fact that if you are able to help entrepreneurs focus on execution and not all the stuff that we tend to see on TV and all this externally facing, but you give them the tools to really build the business, then they're actually, I won't say they're going to be COVID resistant or any other thing resistant, but they're certainly going to be resilient. And that's what we're most proud of for our entrepreneurs.
Amazing. And in focusing on, DC, can you share a little bit more of your background on the journey to, becoming a serial entrepreneur and investor? How did you end up, starting Project 500? What branch to that?
So it's funny, as we've expanded, Eureka is obviously national, and 1863 is now national. And it's funny, it's a great question, because I think every entrepreneur has a significant tipping point in their life that puts them in that track. Because I don't know anybody wakes up and go, I want to risk all that I have and not get paid for months to become an entrepreneur. My tipping point was when I graduated from Georgetown. I was working and I had an idea for a business. And I told my boss, I was like, this whole thing is not working for me, but you have my full attention 9 to 5, but I'm going to work on some other stuff afterwards. So I'm going to hang out. And she said, no problem. And I went to the SBA and I asked for a loan, and the woman said, no. And I said, okay, no problem. I'm a finance major. I'm ready to make whatever change. She goes, well, here's the 3 things you have against you. She said, you're Black, you're a woman, and you're a Black woman in financial services. Now, I just dated myself because I didn't say fintech. I said financial services. And I was like, wow, that's a heck of an answer. And luckily I left. I didn't cause a scene. Nothing happened. I left. But when I got downstairs on the ground level, I said, I will never allow this to happen to somebody else who looks like me. And so that was 1993. And so I've been on that path since then. So I've, to your introduction, which was very nice and very kind. Thank you. I became an entrepreneur. I finally started the business. I had an exit. I decided I wanted to invest in other people. I became an angel investor. Then I was like, let me do venture capital. And I was like, wow, that's overrated. And then I realized, though, I think, as you've mentioned a couple of times, policy, I realized, oops, sorry about that I can do as much as I can do. I can get to one entrepreneur, I can get to 10,000 entrepreneurs, I can get to whatever, but that's not going to change the system. And so at some point in time, particularly when Clinton came in office, I had the privilege to be able to serve and be an appointee. I realized then quickly that all the stuff I've been doing in the nonprofit sector and even in my business, if I didn't have a lever to really create systemic change, I probably was never going to be happy and never satisfied. So it became important, although I didn't yield the results I'd hoped, but it really became important to start to bring in this element of policy, which I think actually concretizes a lot of the work that people are doing in the name of racial equity and economic equity and parity, that there's got to be some permanence to the solutions that we're creating.
And what are some of those things that you went in and you said, this is what are some of those changes that you advocated for then?
Yeah, I think there are changes we all advocate for. I think I realized how hard it was. When I went into the Clinton administration, my goal was working for Treasury that I would actually start a bank. And I would say within the first 3 weeks, I was like, oh, I am definitely not starting a bank. And part of that is because I think we have to be able to separate the institution from the regulation. And so what I realized is that banks, let's be clear, they got some problems. But there's a set of rules that, since I also played the role of a regulator, that we really don't allow financial institutions to get very creative when the customer doesn't look a certain way. And you have some amazing banks. Emma Chappell is one of my heroes out of Philadelphia, United Bank of Philadelphia. She decided that, she was going to support her community, even if it meant her reserve requirements were going to be a little lower than they were supposed to. And she thought because she was making loans to communities that, let's be clear, no other bank was making, she would be okay. And of course, the story there was that she was ousted and they threatened to shut her bank down because she was actually serving the community that she set out to serve. So I quickly realized that, at least from a financial perspective, there needed to be real change from a regulatory perspective, and that there were some policies that we could do to move the needle, but there wasn't a lot until we really overhauled and got a grasp on how do we ensure that there's parity and equity in lending. And unfortunately, it's not as simple as a zip code anymore. And it's not as simple as this is what the person looks like. So it's a battle I still think about, but I had to let that one go and came on back out to do some work on the ground.
Amazing. And as you think about it, is like, if we take a step back, I know you also teach at Georgetown. I'm sure some of this is within the class you teach, but what are things that we can advocate for at that systemic level, to really move the needle for underrepresented founders, women, people of color that are may not have the same access to capital?
Yeah, what I quickly realized, at least from a Treasury perspective, let's be clear, lots of equities happen across all of the agencies of the federal government. What I realized in Treasury, at least when it comes to finances, is that it's going to be hard to change the regulatory system, right? The oversight. But if we can, because there's clear parameters that we want banks to stay within, hence we saw the crash that happened. But if we can change some of the inputs that then move the needle a bit on who gets money, that would be helpful. So I think one of the policy levers is Community Reinvestment Act. It's been around for a long time. It hasn't been reauthorized in a minute. And it would be great if that was reauthorized, because that was a regulatory lever that said banks actually got grades on how well they were lending to underserved communities. Now, granted, the grades don't mean as much anymore because they typically would be a incentive or a barrier if banks wanted to merge, and we're not seeing the same level of consolidation as we did in the early 2000s, but still it's a public grade that I think causes a little bit of shade for folks, and hopefully it drives better behavior. Another quick input is credit scores. Having worked with Fair Isaacs, I get the value of a credit score, but the reality is different people operate differently when it comes to finances. If I have a ton of money and I can pay things in advance and I can have multiple homes, wonderful. But if I am somebody now who, God forbid, and let us continue to support them, working in food service and COVID, I am managing the one paycheck I got, trying to figure out, do I pay my cell phone bill first? Do I pay my car note first? Do I pay my rent first? Or do I, help my family? And we all know it's cell phone and help family, which means some things are going to go by the wayside. And so we have to understand that wealth causes people to have different behaviors or lack thereof. And so now there's a lot of proponents who are looking at alternative credit scores saying, you know what, a mortgage is not the only indicator of people's economic well-being. Rent should indeed be an equal indicator, which it is not right now. Me paying my cell phone bill, there aren't too many poor people that don't pay their cell phone bill, because that is a primary way to drive economic security, connection to family. Is a job going to call me? We don't count if you pay your cell phone bill. So there are things that we need to think of from an input perspective that I think would help level the playing field a little bit, and recognize, yes, there is systemic racism and bias in the system. And therefore, until we can fix that, which is clearly a journey, we need to understand that the same rules cannot apply. And so that's why I think if we focus on inputs in terms of how Black entrepreneurs are scored, how Black entrepreneurs are perceived, if we can get more information out there about their journey, then I'm hoping that will begin to change some of the levers that unlock money or unlock support. And then we can talk about how do we really overhaul the whole regulatory system when it comes to finances, because it is completely based on bias.
And I want to go back to something you said before. You said, I tried VC for a while and that was overrated. Say more about that. Let's dive in there.
I think, there's tons of shows on the streaming services, and students who take my class, I want to go on a VC, and I go, why? I go, I think half of these gray hairs are from my kids, and the other half is from being an investor. I think the reality is I thought, VC was going to give us access to a lot more money and we'd be able to do a lot more. And the reality is it gave us an access to more money, but the money from a venture capitalist comes from limited partners. Those limited partners are pension funds. They are foundations. They are corporations. They are family offices. Some of them may be state pension funds. Private pension funds are a little bit harder. And they all have a fiduciary duty. And unfortunately, there's not a great level of data around the success of emerging fund managers. There's not a large data set that says, oh, Black people or Black women or Black men invest better. And so there's a real hesitancy. And I would say that was probably one of the biggest battles we had in trying to get that fund fully invested, because people didn't believe in me. And when I said I'm investing in women entrepreneurs of color, they definitely did not believe in that. And partly because they're large institutions who would rather write a check for $100 million to a hedge fund than write $1 million check to me, because the cost of that transaction is high, the diligence is high. And so I think it's a combination of real economics of how do you deploy money when you have that much capital. And I think there was, again, just bias in terms of, can you really help these people? And again, just like the women in the SBA, I don't know anybody who's made it. And let's be clear, there are tons. I mean, granted, Vogue did their best and got like 30 something people, but there's a lot more of Black entrepreneurs who have been extremely successful, but their stories are not well known. And so we have a negative narrative around our potential because we're not talking about those success stories. I mean, thank goodness the gentleman who founded Calendly finally got some coverage to say he now is probably one of the highest valued companies founded and run by a Black man. So I hope that it will change, and not just because it's Black History Month, but I think if we have more stories of successful Black or brown entrepreneurs, then people can say, oh, this is not an anomaly. This is not a one-off. There is actually an entire community that we can point to, and then begin to make assessments on capacity, potential, return, all those things.
Absolutely. And that's what this live stream is about. So I'm glad you're here.
Yes,
preaching the good word. So that's great. Okay. When going back to your entrepreneurial story and focusing as I'm looking back as there was a stint in which you left the DC area and then you came back. Yeah. Can you share more about what was that shift? Talking about Tides when you served as CEO of Tides.
Yeah, so I actually left twice.
Okay.
So when I served under Clinton, I started in DC, and I was curious at that time, what was the difference between a national agenda and a regional agenda? So I actually asked to be moved to the West Coast office and lived in San Francisco, and lucky me, Hawaii just happened to be in my region. But I wanted to see kind of what is the impact of DC on regions. So I probably went as far as I could. And then I came back because I was like, wow, this is not a place for me. When I had the opportunity to become CEO of Tides, I said, let me go back again and try it again. And I took that on for a couple of reasons. One, after having been in the nonprofit sector, I began to understand the bias and the politics in philanthropy. And the fact that as Cheryl Dorsey, who's a longtime friend of Echoing Green, has clearly articulated, a Black nonprofit CEO has a much harder time than a white nonprofit CEO to be able to raise money and grow and scale their organizations. And so well before that, that was a hunch that I had, having been a nonprofit director and seeing the disparity within the funding. So I said, let me go work on the other side. And so it was a privilege to be able to work at Tides, which has multiple entities. We have a whole charitable arm that does donor advised funds, and we make tons of grants. We have an entire real estate side, which was great to be able to help businesses have space. And then we had a whole political side, right? We had a C4 and was very active, particularly in California politics and across the country. And so I went back to San Francisco to give it a try, and made it 3 years and realized philanthropy is just as jacked up as everybody else, to be honest with you. That, when we talk about systemic racism and bias, I will say that probably for early on, I was like, well, that must be an institutional thing. We surely can change institutions. But the reality is really all about changing people's minds. And so it was an amazing and enlightening experience. And I left because I got a call to say, hey, do you want to come work for Obama? And my mom was like, I know you're moving back. I know you're coming back. And I was like, yes, Mom, I'm coming back. And because I actually thought, and I'm not sure that I'm going to be wrong, but I was like, we may never get another Black president. So irrespective of whether I agree with his politics or not, which for the most part I did, I was like, let me go do this. And the role was, leading some various initiatives that were really focused on communities of color, which was important to me. And ultimately, my last position was running the White House Social Innovation Fund, where I got to deploy lots and lots of money. And that it was certainly worth the shift.
Great. Can you share more about the Social Innovation Fund?
Yeah, I'm pretty proud of the Social Innovation Fund, partly because I was there, because now it's shut down. It got shut down under the last administration. But I was there at a time when social impact bonds, which we now know that's not what they really are, was started. And so having the privilege to figure out, while I struggled on the policy side, what I have walked away with is an amazing appreciation and understanding of how to use government dollars to be catalytic. They cannot sustain, there's not enough money, it's too many other priorities. But where philanthropy can really get people going and where private capital can cause you to scale, government dollars can really be catalytic. And so I was honored that I was there when the first Pay for Success program was put out, worked with an entire team to get it put out there. And we deployed about 20 million bucks to communities all across the country. And being able to stay there and see those manifest, realize that that's it, right? That for me as a finance person, the glide path of capital had been created, and that government has a policy role, which is a lot harder than we think. They have money and they have complete risk tolerance. So let's put that money out there and get it to work. Philanthropy is slightly more risk tolerant, but it's shorter term. They can't fund things in perpetuity. So that's the next step. And if you use those two tranches of capital to really prove out your investment thesis, show progress in underserved communities, and have some success stories, then ideally the private capital will come because you've stopped the onesies and twosies and the anomalies, and you've actually created a pathway to say, I'm going to have a robust pipeline. Therefore, I need private capital to invest in me.
Excellent. So it's in terms of it's like thinking about these next generation of entrepreneurs and
Absolutely.
how do you and how you use can position institutions to make that the dip in the curve a little bit shorter.
Absolutely.
So for right now, as you're focused on Eureka and 1863. What are some of the next big initiatives that you're excited about?
So I think, for 1863, I'm excited because much to my chagrin, as in the early days, I'm really proud that it is entering the investment business. I think we had hoped that other institutions would step up, and I think they haven't. And so we view the fund as playing that catalytic role and hopefully unlocking lots of other pocketbooks. I think at Eureka, what I'm really excited about is, we're a tech platform and it's, we had to get it right, but we've built an amazing community of entrepreneurs that we've got a lot of success stories. And I think we have really started to move the needle with some of these larger corporations on the power and potential of Black and brown entrepreneurs. Over 90% of our platform are people of color, which most folks are unheard of. And we're investing in them and we're listening to them and we're making sure that they're growing, and we use them as a litmus test on how successful we're going to be or we're not. And so I'm really proud that we're really listening to the community and allowing the platform to be driven by the community, where other cases, sometimes it happens, sometimes it doesn't. I'm proud of some of our corporate partners. We continue to do work with Google. Hopefully we're going to do some more stuff with Salesforce. We're going to be partnering with Comcast on their new initiative to help over 500 at minimum entrepreneurs of color or BIPOC entrepreneurs. So really proud of that, right? Really proud that we have become, again, a lever to unlock some of these corporate dollars in a charitable and meaningful way to help these entrepreneurs. And then also have a voice with these corporate partners, say, look, it's more than money. Like you gotta open up your supply chain. You got to create markets. You got to make markets. You got to let them be in these markets. So I think that's what we're most proud of, that we've really formed some amazing partnerships with senior leaders and CEOs who I think are really committed to this and trying to convince them this is not a one-time program. This needs to be a longitudinal shift in terms of how you think about corporate social responsibility, but also how do you think about marketing, right? I mean, again, I'm always baffled. People say, well, I don't understand why you're helping Black people or brown people. And I'm like, because we are the new majority, right? I mean, we say majority, minority. Okay, I guess that makes some people feel better. But really, we're the new majority, right? In California, we are the new majority. In Utah, hard to believe, we're the new majority. And so I think, being able to push people and be comfortable with that language and owning that this is not just a marketing ploy, but there's really an investment in your own business ecosystem by supporting these entrepreneurs. I'm glad we have those conversations. We haven't convinced anybody, but I'm glad we're at least getting to the point that we can make that the subject of our conversation.
That's great. Well, thank you, Melissa, for sharing your story and your insight today. Don't go anywhere. But for everyone that's been watching, this was Rebel One Live for this week, and appreciate you joining, Melissa. So Melissa Bradley, co-founder of Eureka and managing partner at 1863 Ventures. So thanks again for joining, and tune in next week. So thanks.